We still have participants joining, but I just wanted to kick off with a brief introduction just to say a pleasant good evening to everyone. Thank you so much for joining us today for ACB Caribbean Simply Smarter Business Masterclass webinar series. This is the first in a series of masterclasses that we hope to present to the small business community, both in Antigua and in Grenada, as we prepare to launch our SME platform in Grenada as well. And again, you know, anyone is welcome throughout the OECS and by the Caribbean. Anyone that is interested can join in and log on and join us for these informative sessions. What we do plan to do as well is post these links on our social media. So for whatever reason, if you miss one of the sessions, you can always go back into our social media archives and view it there. So I wanted to kick off as well by welcoming Mrs. Carmen Gomez-Trigg. She's the CEO of the Eastern Caribbean Partial Credit Guarantee Corporation. Thank you so much for joining us, Carmen. I know you were supposed to be with us for our launch of the business unit, but due to the power outage in Trinidad, she was unable to meet us, which I think gave us an opportunity because what she has to talk about is so interesting and so helpful to the development of small and medium-sized enterprises in the Caribbean that I felt that it's great that we're able to dedicate this session to her. So welcome, Carmen.
Thank you. Thank you very much.
And just a quick thank you to our IT department for setting this up and our marketing team for the background work to get us to where we are today, as well as, of course, our Simply Smarter Business Unit. So at this point, I would like to hand over the floor to you, Carmen. So you can begin your presentation. And again, if we have anyone joining us late, we will post our social media so you can view at your convenience. So over to you, Carmen. Thank you.
Thank you. Good afternoon to everyone joining in via the media. I'm going to share my screen and I will talk a little bit slowly because I was told that Trinidad talk kind of fast and I'm down here in the Southern Caribbean. So that's kind of how we roll, but I'll slow it down a little bit as to make sure that everybody understands what I'm saying. It's interesting stuff and it's designed for the SME public. Thank you. Can move on to the second slide. Right, good. So why the PCGC? We were created in response to a credit crunch that was felt in the OECS banking system and the need for MSMEs to have access to credit to grow their businesses. So I know I'm talking to MSMEs and I know you guys have had problems getting money to grow your businesses from the bank. And in 2015 or so, the World Bank and the Eastern Caribbean Central Bank came together and decided that this was a solution that they wanted to put out for the MSMEs in the region. So they got 6 member countries: Antigua and Barbuda, Dominica, Grenada, St. Kitts and Nevis, St. Lucia, and St. Vincent and the Grenadines, to put $2 million each into a pot. And that is how the program was funded. Of the $12 million, 10 million came from the World Bank. So the World Bank does have a heavy footprint on the program. So what's our mandate? Our mandate is to use this fund to promote economic growth and development in the member territory. So we will administer this partial credit guarantee fund, which I will explain in a bit. And we will offer this to participating lenders on your behalf. But before you can actually participate in the program, you need to qualify. And there are several qualifying parameters that I will explain. There are 3 components to the PCGC. The first one, which is what I'm going to delve into, is the guarantee operations. The second one I'm going to touch on towards the end of the presentation. And the third one is where we go out into the global community and find any new changes, any new developments, and we bring them to you, the stakeholders, either via seminars or workshops or newsletters and so on. All of these components are monitored and evaluated via some key indicators that the World Bank would have set for us. So what is a credit guarantee? A credit guarantee is a tripartite arrangement, meaning that there are three parties involved. One is a guaranteeing agency, which is us, ECPCGC. The second one is the commercial banks, the development banks, or the credit unions. These are what we call our participating lenders. They are all financial institutions that would give loans to SMEs and other borrowers. And the third party is the MSME or the entrepreneurs. Now, the agency ourselves provides to the participating lender, ACB in this case, a certain amount. So we hold it, or what you call in escrow for ACB, while they would provide you a loan. So what we do basically is provide some of that security that you need for the loan. So ACB will go through and make sure that you qualify, and they would say, okay, ECPCGC, this person has a good project, has some equity in the project, except that they don't have all of the security. Can you help us? And we would say, yes, we will put up 80% of the required collateral on behalf of that client. So who are the people who can qualify for this? It's open to all businesses operating in the ECCU, and by ECCU, I mean the 6 member countries that the ECCB governs, and less Anguilla and Montserrat, who are under British rules. So the 6 countries are the ones I called in the beginning: Antigua and Barbuda, Dominica, Grenada, St. Kitts and Nevis, St. Lucia, and St. Vincent and the Grenadines. So the business must be operating in one of those 6 territories. The business must be registered. The reason why we ask for the business to be registered is that there are laws that govern the country, and this is one of them. There are tax laws that are meant to be obeyed, etc. Also, when a business is registered, people take them more seriously. They can get concessions from the government, and they can get assistance from the government. So it is really, really important that the business be registered. The annual revenue must be no more than, an annual revenue no more than 2 million EC dollars. Number of permanent employees less than 50, which is where most of our people, our MSMEs, they normally have like 10, 12, 20. And so depending on the kind of business that they are involved in, the borrower must provide 10 to 25% equity in the project for which the loan is being sought. And the borrower must provide collateral of 20 to 25% of the loan being sought to the participating lender. The business may be for profit or not for profit. We do have the situations where there are some churches who want to open a soup kitchen, who want to do some childcare, and those are also eligible for the guarantee approvals. We also look at seasonal repayment structures. We are very highly tourist oriented. There's a high season and there's a low season. So in the high season, we allow you guys to make balloon payments, and in the low season, you can come in and pay less because we know that your cash flow is less in the low season. Certain types of businesses are not eligible due to the product or the service provided. We would work with the bank, ACB, to let them know what is on that exclusion list. We have a consultant who is dedicated to working with the participating lenders to determine whether the business comes on the exclusion list or not, whether the business adheres to the environmental and social framework as mandated by the World Bank. So that's something that you need not worry about. You can come to your bank, and the bank would reach out to us, and we would determine where you rest along the spectrum. So there are 3 products. When we started in 2020, we had one product called a Classic Guarantee, which has the strictest parameters for approval. And then at the ending of 2020, early 2021, we realized that the Classic Guarantee was set for pre-COVID times when things were normal, and things were anything but normal at the 2020-2021 period. So we went back to the drawing board, we talked to our bankers, we talked to the people on the street, and we found out that the businesses that were around wanted a working capital guarantee, which means that they wanted a little bit of money to tide them over, there was some cash flow problems and so on, pay a few bills, buy some stock and so on. So we designed the working capital guarantee. In the initial stages, last year, February, when it was issued, we thought we would issue it until this year, February, but we have been mandated by the board to carry on issuing this guarantee until 2024. The startup guarantee, designed to assist new entrepreneurs, it was originally designed for a 12-month period as well, and we are going to be carrying that one until 2024. Now, the amount that we hold for the participating lender, the bank, there's a certain amount of the loan that we hold, and there's a 2.3% payable on that amount. That amount, we bill the bank, and the bank would normally pass on that cost to the borrower. I have good news. Today we had a board meeting, and there will be a release coming out that this fee has now been reduced to 1.5%, which makes the terms a lot easier for the borrowers. Okay, so I'm going to go in a little bit of detail for each product by product. So the product one, the classic guarantee, is available for working capital needs like payment of debt, payment of some bills, payment of salaries, etc. Inventory purchases, you want to buy some stock. Investments, you want to buy some equipment. Expansion, let's say you're working from your home kitchen, you want to move into new quarters, it's available for that as well. And for overdraft, the banks sometimes realize that the customers need a loan, but they also need an overdraft facility. So we cover both. We have instances where we have guaranteed 2 items for one particular customer. It was in the form of a expansion loan, that was one. And the second one that we would have done an overdraft facility as well. So we would have done 2 guarantees for one customer. It happened at least twice, so we are okay with that. Once the maximum loan does not cross $300,000. The guarantee percentage, we would guarantee 75% of this $300,000. So if you come to the bank and you want to borrow $300,000, we ask that you have 25% in equity for this particular project. That you have 25%, whether it is you would have started the project before and you can show the bank where you have in fact expended 25% of the project cost, or whether you have cash that the bank can see you're going to put that into the project. So however the bank is going to look at it, we are going to ask that you provide the bank with 25% of the equity. Then we look at the collateral requirement. Collateral in this case means the security. So the bank is going to ask you for security, and they normally do ask for 75%, sometimes more than 75%, depending on the kind of business that you're borrowing the money for. Now, there's something called a debt service ratio, which means that after you've cleared all your expenses, you remain with the repayment to the bank. Now, we ask that you don't have only the repayment. We ask that you have a little bit more than the repayment, just in case something happens and you can't repay 1 month, there is this excess to cover for those eventualities. How long the guarantee goes for? It goes for 10 years. And we have good news again that now, because some of the banks told us that they extend loans 15 years, we can go up to the length of the loans. If a loan is 15 years, we would extend that guarantee until 15 years. Sometimes the banks want to extend the loan a little longer for the repayment to be softer on the borrower. We would go along with that. So the second product, which was launched in February 2021, is the working capital guarantee. And it's strictly for working capital, meaning if you have a short-term need to build up some stock, pay some wages, pay insurances when they come due or so, we would look at that as well. We are saying that we would, because it's a short-term loan, and it's a working capital, it's a short-term need, we would only go to $200,000 in terms of the maximum loan we would approve. The guarantee percentage, we would guarantee 80% of that particular facility, which is up from the 75% I just spoke about. And therefore, the maximum we would guarantee, or the maximum security we would provide for a loan like this is $160,000. What stake do you have to have, which is your equity in this particular project, you need to have 10%. So we've come down from the 25% to 10%. We say if you have 10% stake in that project, we can go with it. Collateral, what is the collateral required? We've come down from 25% to 20%. And what we and also the debt service ratio is 1.1%, 1.1 to 1%. The length of the guarantee is 5 years because this is a short-term guarantee. We also have two special conditions for this particular guarantee. It is that we can allow the bank, if you just have a portion, let's say 10% collateral, we tell the bank, look, open an account, a separate account for this client, make sure that they don't have access to it, and make sure he deposits money, a certain amount every month, so we build up the 20% collateral for this particular one. What we also offer on this particular guarantee is we tell the client, you can pay interest only for the first year of the loan. So it's kind of a softening of the blow for the borrower until he or she is able to catch themselves and to do full repayment of principal and interest. So the next product is the startup guarantee. And this has a broad range of uses for working capital, inventory, investment, expansion, overdraft, and so, you know, whatever the new startup is going to be looking at. Now, the thing about it is that this is not for somebody who's coming off the street with a new idea. We ask that you must have made sure that your idea is workable. You must have been 3 months in business. So we could look back at those 3 months and see what you have done. So it's not just somebody coming off the street and saying, I have an idea, I need a loan. That's not going to fly. You need to show the bank where I have started this. I want to build it up a little bit more because I have proof of concept. I want to work in that direction of expansion. You need to have something to show the bank. The loan maximum is $100,000 in that particular one, simply because startup loans are very, very risky. The failure rate of startups is over 75%. So we've put aside a little bit of our funding to look after this riskier proposal. We would guarantee 80% or $80,000 of this one. And again, we asked for a 10% equity requirement. The collateral is 20% of the sinking fund. The sinking fund is what I just explained, that the bank would open a separate account that the borrower does not have access to, and they would build up the collateral until they arrive at the 20%. And the debt service ratio, we ask that you clear all your expenses and that you have 110% of the repayment amount clear every month, just in case it's an eventuality where something happens and you can't make the repayment. How long is this guarantee? It's 10 years because we understand that somebody who is new in business may not have the wherewithal to be able to make payments for a shorter period of time. So what's the process, you may ask? The process is that the borrower approaches the participating lender for the funds. The participating lender, that's ACB, would assess the project and conduct several tests of eligibility for the loan. So they would look at the character of the applicant. Does he have a judgment? Does he have loans elsewhere that have not been paid on time? Does he have any bad loans at the bank? So that's the character of the applicant we are looking at. Because a bank has to ensure that this interest is protected at all times. And we also have to make sure that our interest is protected at all times. Let me look at the capacity of the borrower to repay the loan. We look at the business. Now, mind you, these are all business loans. So we look at the capacity of the business to generate enough income to repay the loan, to pay its expenses and to repay the loan. So we look at your cash flow. In the case of a new business, we look at the projected cash flow. We ask some questions and so on. So we assess whether the business has the true capacity to be able to repay the loan. Because you could have as good a business plan as you want. If you cannot generate revenue, then it makes no sense lending you money. Then we look at the capital or the equity injection. Now, let's assume that you have a project that's going to cost $100,000. Let's assume that. We are asking that you must put, of that 100,000, you must put, in the case of the classic guarantee, the first one, you must have 25,000. In the case of the working capital or the startup guarantee, you must have $10,000 to put to say, this is my stake in the game. This is what I am putting into the project. So we ask that you have some sort of skin in the game, because it's too easy for a client to walk away from a commitment if they have not put anything down. So that is a stake of the borrowers, the seriousness about this whole enterprise. Could you just go back a little bit, please? Thank you. Collateral. We're looking at the collateral being offered. In this case, you ask for 20%. We would go with the 10% collateral with the sinking fund. You can go ahead and you can do the sinking fund, no problem. The bank is going to look after building up your collateral. Once the loan is repaid, that is money available for you to use for your business. Conditions. Now we look at the economic situation of the country. We look at the situation of the industry and sector that the borrower is in. Is it declining? Is it stagnant? Is it a very fickle sort of industry? How many players are there? Is there room for this business to get enough market share to be able to generate a reasonable revenue? We look around the region, because as a regional organization, we do have sight of what's going on in all the islands. So we look at the region and we ask some questions. We look at the budget of the country to see where the government's head is. Is this an industry that they're going to promote, or is this an industry that they're saying, you know what, we have enough of these businesses, we don't need anymore. So we look at the total package, and then we decide what's going to happen with that particular loan. Now, if the participating lender is satisfied that the project is sound, having done that kind of assessment, which we also do, and the client is able to repay the loan but lacks sufficient collateral, the participating lender, that's the bank, would be able to submit the application to PCGC for a guarantee. PCGC would assess the application for underwriting and soundness using those parameters I just described, going into a lot more depth because we have a view of the whole OECS. So we would look at it in a little bit more depth than the bank would. And we would, if we are satisfied that everything is okay with this loan, we would grant a guarantee to the bank on behalf of the borrower. We don't interface with the borrower, but we deal directly with the bank. However, if there is a grievance, if the borrower has a grouse or a complaint, there is on our website a grievance redress mechanism that you can go to, and you can lodge a complaint on that particular website if you do have any grievance whatsoever in terms of the process, in terms of how you were treated, in terms of a denial of an application. You can go in and you can lodge your complaint there. So remember, we had another mandate which is called technical assistance. We provide technical assistance to the banks, the credit unions, and the development banks as well. We've just finished developing training modules with the German Savings Bank, and we are going to be ready to roll out those trainings to the loans officers of our participating lenders during the next quarter of this year. So April, May, June, we'll be rolling out that training program. And these are some of the areas we are going to cover: SME finance, credit analysis, verification of information, financial and cash flow analysis, and portfolio management. We are also going to unveil some new advanced ways that they could use to assess MSME loans, which is different from a larger corporate loan. So those things are in store for all of our participating lenders. For the MSMEs, the entrepreneurs themselves, we are going to be hosting some training sessions in business planning, finance, cash flow management, and marketing, and some other areas as well, some soft skills as well, so that our SMEs get used to the idea of keeping proper records, of managing their business properly, and so on. This is going to be done on a national level via national agencies that are already involved in these particular areas. We will be working with those national agencies to be able to get the training programs out to you, the entrepreneurs. So with all that I've said, ECPCGC does not stand alone. We are accountable to all of the member states. That's the government of Antigua and Barbuda and all the other governments. We are accountable to the Eastern Caribbean Central Bank, and we are also accountable to the World Bank. And because of these three levels of accountability, we have to keep a lot of records. We have a monitoring and evaluation framework. So we do keep, so there are a lot of questions that we ask of the borrowers. There are a lot of questions that we ask of the banks so that we can feed this information into our report to these various stakeholders. Okay, and I want to say thank you very much. That was it, and I can I'm able to answer any questions that you may have.
Thank you so much, Carmen. So what I will request is if there are any questions, you can use a Q&A. You can post them in there, and Carmen can answer you verbally. So we do not have any open questions yet. Well, Carmen, I think your presentation was quite thorough. We don't have any questions. But again, to reiterate, what I'm going to do is post this on both ACB Caribbean's Facebook and YouTube channels tomorrow so that people can review them. And, you know, should you have any questions, you can reach out to us directly at ACB.
And I would invite Marita to send those questions to us if people need to look at the presentation again and then get their head around what is a lot of information. If they need to get their head around the information and then to think of their questions, please send them to Marita and she would confer with us and we would give the answers and have them back to you in a short space of time. Okay,
so I have one question, but just to let anyone know, if you have any questions for us, you can send them to marketing@acbonline.com and we can get those to Carmen for you. I have a question from an anonymous attendee asking, what is the turnaround time for applications?
Okay, so once you have provided the bank with all the information that they require and they send it to us, there's a 7 working day turnaround time. Now, we do have an electronic platform, which makes life a lot easier. So we have been doing loans applications that come to us that are complete. We approve that by the next day. However, we have found that some institutions don't give us all the information that we require. So there's a back and forth. But once we have a complete application, the next day it is done. So the onus is on the borrower to provide all the information that the bank is asking for.
So Carmen, I have 2 more questions, but just to let you know, well, to ask you, sorry, to let our attendees know your website. What is the website for, so that they can go on there and find any more information?
It's www.ecpcgc.org.
All right, so I will also post that on the ACB Caribbean platforms along with the link to watch this webinar so people can contact you that way. So I have another question from an anonymous attendee, and it's, what is the difference between startup and working capital guarantee?
Okay, good. The startup guarantee is for businesses that are less than 2 years in operation. So you're kind of new, you know, you're creeping before you walk, you're exploring the situation and so on. And we want to walk that path with you. So because of that, and because there's a very high failure rate of the startups, we would only go to $100,000 and we extend that for a 10-year term to give you a chance to catch yourself. The working capital guarantee, however, is for a business that is more than 2 years old. This business has been around the block and then some. They have a little bit of difficulty with the cash flow because of COVID, but they know that they can generate the revenue to repay a loan, so we would grant that. So those are the 2 differences. One is a business that is between 3 months to 2 years. That's a startup. And the other one is for businesses that are over 2 years old, have a track record that the bank can look at. You know, they're really into business. So that's the difference, basically. In terms of the amounts that they qualify for, the startup qualifies for only $100,000 and the working capital would qualify for $200,000.
Okay, great. I have another question and a comment. I have a comment from Mr. Vernon Jeffers saying, yes, this presentation was quite informative and thank you. And the anonymous attendee is asking, can you provide some guidance on the type of businesses that will not qualify for the guarantee?
Yes, this question comes up a lot because World Bank has a very extensive exclusion list. But when we went through the exclusion list, the ones that we found that didn't qualify were like the rum shops, the bars that sold drinks exclusively, because there was something with the World Bank that says that if more than 10% of your revenue comes from the sale of hard liquor, they can't finance or we can't do an approval for something like that. So the little shop that is selling some goods and have a little bit of drinking, something going on the side, they would qualify because most of the revenue come from whatever they're selling on this, you know, what's their main thing. The restaurant that's selling cooked food, they do sell some drinks, some of them are mixed drinks and so on. So once you can ascertain that less than 10% of the revenue is coming from the sale of hard liquor, they would qualify. The gambling shops and the casinos are on no-no. However, we do have situations where you have a little greengrocer or a little mini mart. He has 1 or 2 machines. They have to, you know, to amuse the public when they come in. That's okay. It's the main income. When your main income stream is from the sale of hard liquor or your main income stream is from gambling, those are the 2 that we can't touch. And those are really all that of the exclusion list that really are relevant to the Caribbean. There was mention of course, of people who are doing developments, but the size of our loans don't already cater to that type of business venture.
Okay, so I have one more question that is attendee asking about the grievance form there, and the question is not very well worded, so I'm going to try and interpret this. So please feel free to correct me if I am wording your question incorrectly. But they're asking, what's the point of the grievance form if at the end of the day the bank ultimately decides whether they're going to lend or not?
Well, the bank is the one who is putting out the money, and the bank reserves the right to say, yes, we can approve or we can deny this loan. There are normally very cogent reasons that the banks have for not giving somebody a loan. Either A, you're not registered, B, you don't have proper accounting or record keeping, C, the management of the business is a little bit wonky, so they can't determine who is doing what and so on. So the banks have, from what I've seen so far, our banks have very valid reasons for either accepting a loan or saying, no, we can't go with it. What we are doing as an institution is we know that there are some people who have some good proposals, but they're not in exactly the shape that the bank would like it in. We are hiring a marketing consultant to work with those referrals from the bank to help them reorganize their plans, reorganize their financial reports and so on, so that they can now come back to the bank and say to the bank, okay, I've received some help. This is the proposal I presented to you before. It's now streamlined. Can you help me? So it's not just the question of the grievance mechanism is not to go to complain that the bank did not give you a loan. That would not fly. It is if you have a legitimate complaint saying that I have been waiting for a response for X time and I can't get you to the bank, or I don't understand, the bank did not tell me why they did not tell me. So there is a responsibility on the part of the bank to be very clear with the client as to exactly why they did not get the loan, exactly what the process is and so on. But just saying that you did not get an approval from the bank is not a valid complaint.
Okay, so I have another question. Can you confirm whether the debt service ratio is related to the business or if it is based on the entrepreneur? You know, in the region, most of us are sole traders, hustling, trying to make ends meet. So just because we have a mortgage, we will automatically be unqualified, which is the struggle we have had for years with banks and credit unions trying to get a business loan.
Okay, so let me introduce a term into the mix. It's called commingling. And what it means is that you have a business and you don't pay yourself a salary, but all the family expenses come from the business. We are very, very, very firm on the fact that you need to separate. If you have a mortgage to pay, you have groceries to buy, you have school fees to buy, pay yourself a salary, a fixed salary from the business, whether it is $5,000 a month or so, and make do with that. Let the business generate revenue to pay the income. If it is that you don't do that, then the bank has no way of ascertaining that you can in fact repay the loan, because an emergency could come because you commingling the funds, and you could say, well, something happened to my child, I had to pay that first before I pay the bank. And that's not good business for the bank. That's not good business for me either, because I have a responsibility to all the governments that have put money into this kitty. So therefore, what we ask the banks to do is to separate. Now, we have had applications coming to us where some people have a side hustle and they're going to be paying the money, the loan from their funds that they get from their employers. We tell the banks, you need to separate. Because if that person loses their job tomorrow, we need to make sure that this business can pay the loan back. So it must be a separation, which is why I urge entrepreneurs to go and get formalized, to keep their business account separate from their personal. I know it's difficult, particularly in people who are doing a sole trader, you're doing a little hustle, you're really not too on board with the reporting and so on, which is the reason why we are going to be trying to give business training to business people, whether they are sole traders, they are corporations, or whoever they are. We are going to show them the importance of doing the separation, because without the separation, the bank cannot do a proper assessment.
Okay, and I have one final question. So are there opportunities for grants or to help develop an idea?
Not in our scenario, no. There are no opportunities for grants, but I do know that there are some other agencies, and also particularly post-COVID, some governments have combined loans with grants. They have given soft terms and so on. So I know that is out there. There's Caribbean Export, depending on what venture you are in. But for our purposes, we have to make sure our governments are satisfied, and therefore there is no grant. Also, from a standpoint of sustainability, we have to make sure that by a certain period in time, a couple of years hence, that we can support ourselves, and the guarantee, the fees that we charge is one of the ways that we ensure we have a revenue flow. So no grants from this particular program.
Sorry, I forgot to hit mute. So thank you, Carmen. Those are all the questions that I have so far. So yes, I think at this point we can probably draw to a close. And thank you so much for the informative and interesting information here. You know, I think it's a great opportunity for businesses in the region, and I think, you know, I hope that more people will view once we've posted online, and I'm happy to be able to forward questions to you as they come into the bank. So thank you so much, and you know, thank you to our IT department for the background assistance. And yes, so unless we have any more questions, unless you have any last words, Carmen, I'd like to close off.
Okay, so thank you very much for inviting me, ACB team, Marita, Sidlow, Narcis, Joanna, the team. I'm happy to share with you again, and if you do need me to present to your small business associations, your professional associations, I'm available to do that as well. What I'd like to tell the listening public is that these funds have been made available, or this initiative has been made available to you by your government. Your government has invested heavily into this project, and I'd like you to take advantage of this particular initiative because it's going to be down to your benefit in the long run. In the short run, there may be a hump to get over in terms of formalizing your business and so on. But in the times to come, you would see the benefits. So I urge you to take advantage of this particular initiative, and I'll be happy to work with Marita and her team to your benefit. I want to thank you so much for having me a great listening audience and for the questions that you have asked this evening.
Great, thank you. I'd like to wish everyone a pleasant good evening, and thank you for joining us. And please follow us on social media, Facebook, Instagram, YouTube, and even on LinkedIn. We're starting to build a little profile on LinkedIn. And stay tuned for the date for our next webinar. So in this masterclass series. So thank you so much.
Bye, everybody. Have a good evening.
Wish you all a good evening.
Okay, bye.
Bye.